Commonwealth will literally be the largest fund on the planet that's owned by the people.
Hello. Can anyone hear me out there?
Hi, John.
Yeah, great, Tony. Great. Great to be here. I've got the privilege of hosting this wonderful event today. I was trying to ask the guys backstage what episode number it is, and we think it's number 15. But my better half, Tim, normally does the hosting, so he has all that information. I see that there's some really good guys joining the panel here. Really excited to welcome the guys from Bitlayer, Nexis, and Bluwhale. And then we've obviously got some of our oracles. Thanks so much for joining, guys. It's obviously been quite a tricky market for the last few months to navigate. It hasn't been the normal kind of bull run markets that we've had over the last few bull runs. So yeah, I'm glad that guys are still here and guys are still relevant and paying attention to what's going on. And yeah, just thanks for being here. Obviously, this is Commonwealth spaces, so we've got some really exciting developments happening behind the scenes at Commonwealth, and I see that Tony has joined us, our CTO and one of the founders. So thanks so much, Tony, for being here. I do have a few questions that I'd like to dive into just before we get started with all the other stuff about the developments that have been happening at Commonwealth. Obviously, our token launched a couple of months ago, and I'm sure most of the viewers in the audience here would love to know what's happening with Commonwealth. So yeah, Tony, how are you doing?
Hey, John. I'm doing well, thank you. We've been trying to keep the community up to date with our monthly development updates, but I find each one we sit down to write gets longer and longer. There's so many things going on. So over the last few, I guess, weeks and months since TGE, we're really working to evolve the platform and protocol from the beta state it's been in to a full version 1. So we're upgrading various parts of the UI, as folks will have noticed, and we're continuing that work. We're also looking at it on a much deeper level and looking at improving performance and responsiveness for various geographies. And we've had some great successes there, but still a little bit of work to do. And then in addition, we're working on, I guess, a number of innovations in the space. One was we just brought our dynamic NFTs to market, which is not, groundbreaking in itself. But I think what we're trying to do there is really just make them a lot more useful and put the utility front and center. And we're finding that, given our NFTs are really utility driven, that there's a number of opportunities in there to kind of expand on the value that they offer. So I think the last piece we released was just making the media reflect some of the metadata. So they update in real time now to reflect either your ownership of a slice of the fund, or in the case of a Genesis NFT, the amount of actual wealth tokens that are still associated with that NFT. And that's kind of really, we kind of rushed that out, I think, just to try and prevent any fraudulent activity on marketplaces. And then in addition to that, it's kind of the first part really of a series of kind of bringing a lot of more utility both to the funds and to the NFTs. So we're planning on launching our own internal NFT marketplace sometime in probably August. I think it's going to be in beta, a closed beta for a couple of weeks. And again, we're seeing opportunities there where even with some of these utility NFTs, they can still be susceptible to fraud. So we had a member of our community who put in an offer on a Genesis NFT, knew enough to go in and double check on chain that they still had all their wealth tokens associated with them. But in the moment between accepting or putting in the offer and having it accepted, the NFT had been drained of its wealth tokens. So we're learning from pieces like that and making sure we're preventing that kind of gaming on our own platform. So I think it's the first of a series of exciting developments to try and make the space a lot more robust, a lot more transparent, and obviously there's a lot more to come there. And then lastly, something we haven't spoken about much, and I know we'll end up talking about that this week, John, is we're looking at several proposals for new types of funds. We really built Commonwealth from day one to be more of a funds engine rather than a simple, here's a teamed fund, invest in it or not. So we're hoping to showcase some of the flexibility and power of that over the next number of months. Some very exciting developments there. And that's pretty much what I can think of off the top of my head right now. Is there anything specifically, John, you had in mind, or anything else I haven't touched on?
No, listen, those updates were great. For me, one of the things that you maybe didn't mention was, the idea of running our own NFT marketplace. One of the big advantages to that is the fees can kind of go back to the holders of the wealth tokens, and it's not just, those fees aren't going to Blur or OpenSea or one of the other platforms. So I really did like that idea when we spoke about it in one of our strategy sessions. And then, of course, there was also the Chainlink partnership. I don't know how much you're allowed to mention about that, or if you can bring it up.
Yeah, of course. I mean, I can't believe I forgot actually about the fees aspect of the NFT marketplace. That's quite correct. And in addition, as you may know, many of the existing NFT marketplaces won't allow utility-driven NFTs in there because of what they're situated in the US, and it may not be compliant as they see it with SEC guidance and things like that. So they don't enforce royalties also. So we'll be able to capture the royalties and transaction fees and drive that back straight into the protocol for the benefit of all the users. The Chainlink partnership is has progressed quite a lot, I guess. We started initially integrating them just on the back end in terms of one of our core workflows, which was dispersing the investor's principal and any potential profits back to the investor as quickly as possible. And we released that, I think, about a month or so ago, but had its first dry run yesterday when we made history by streaming investors' principals back to them, their first tranche back to them. The whole thing took a matter of minutes. And that's just fantastic to see that, traditionally you invest into one of these funds and you're kind of kissing your principal goodbye for many years. But in this case, the winners of the Priceless Fund, who received their slices of the fund in March, started receiving their profit yesterday. And that will be claimable now every Friday going forward. As each project vests its tokens and they're harvested, the USDC will stream straight back to the investors. And that's entirely in relation to our own smart contracts, but also the layer of automation we're working through with Chainlink. And then in addition, we're planning on integrating them elsewhere, again, mostly on the back end. And then the big one will be in Q4 this year. We hope to start looking at integrating CCIP for interchain interoperability. As you know, John, many of our projects are not on Ethereum or EVM compatible networks, which leaves gaps in our automation that we have to fill manually for now. But with CCIP and kind of building out more of a robust backbone ourselves, we hope to streamline all those operations, which will be just to the benefit of the platform, really.
Yeah, fantastic, Tony. Thanks for the updates, and to the community out there. We're going to be here like a lot in the future, doing many spaces. We're going to have Kyle there. We're going to have other founders of the project on these spaces, and we really encourage community to come ask questions if anyone's wondering what's happening. We're fully transparent about everything. So yeah, please join spaces and ask as many questions as possible. Yeah, and then one of the main things that I love about Commonwealth is we are associated with some of the biggest guys in the space, and some of those guys are our oracles, and they've given us access to some of the biggest projects out there that most people don't have access to, and that's what kind of Commonwealth's all about. So yeah, once again, very big welcome to Charlie from Bitlayer. how's it going, bud? How's things going with your project? Can you give us some of the developments that have been happening in the background?
Oh, sure, sure. First of all, thank you very much, Jonathan, Commonwealth team for the invitation. Very nice to meet you. Very nice to get a chance to meet all the audience. So this is Charlie from Bitlayer. Yeah, super glad to have Commonwealth community support us. There's a lot of things happening. A lot of things happening. Marketing has been slow. It's good for us to give more time for us to really prepare for a lot of things, for media management, community building, and so on, to get ready for the upcoming bull run with a lot of engagement and activation. So Bitlayer right now, we just hit number one on DeFi Llama as the biggest TVL on the Bitcoin layer 2 space, with over 400 million TVL. Plus the programmable Bitcoin like STBTC, LBTC, we have over altogether 550 million TVL already. We got around 200 ecosystem project fully deployed on mainnet. Within that 200 project, majority of them are DeFi across like stablecoin, Nexis, real world assets, money market protocol, perp dex, and prediction market. Because of the European Cup, there's a lot of prediction market and transaction happening, which is pretty good. We see quite a big influx of user interactions on our chain. What's happening on the operation side, exciting things to share is we just got an announcement from Binance on the Binance Web3 wallet. We're going to kick off the ecosystem campaign from August. We are already in the process with OKX Cryptopedia campaign that we got over 83,000 participants already. For the people in the audience who have OKX wallet, you can still join as well to interact our chain, go through the whole quest list to share some of the rewards in the airdrop pool. So things like this we keep doing for two reasons. One, to educate the community and the market what is the Bitcoin layer 2. We're EVM compatible. Learn how to bridge the gas, right? Get the programmable Bitcoin as gas fee, interact all kinds of applications on the Bitlayer ecosystem. Second thing, of course, have some access to some of the rewards. Most of them we ask our ecosystem project not just give points, because some of the people actually kind of fed up with all the points, right? Because that was very disappointing. So we tried to make sure it's actual airdrop tokens and so on, and also understand what is the Bitcoin ecosystem, right? To let users to find let the project to find a product market fit. Essentially, we want to invite all kinds of builders in the space. So a lot of new primitive projects are in talks with us. We have a very short window, but a very exciting time to deliver one of the first Bitcoin ever in the history, the Bitcoin finality ecosystem, that the transaction happening on the layer 2 can verify on Bitcoin layer 1. That never happened in the history. All the infrastructure in the past are just sidechains. So we are just 1 or 2 months away to deliver this Bitcoin finality version of real layer 2. So yeah, that's pretty exciting. Hopefully we will get it delivered and get all kinds of projects upgraded to that version in September. But from that, before that will be basically just all kinds of DevRel, all kinds of community work to prepare for that. We'll be in Bitcoin Nashville for the audience who are actually going there. It's going to be one of the biggest Bitcoin event ever in the history. We'll have a lot of exposure there. Happy to see you guys in person. Feel free to check out our booth. We sponsored actually the race car, and Bitlayer has a very strong race car kind of branding. So we'll have to see everybody there. Yeah, that's kind of the TLDR version about what's happening in the Bitlayer.
Yeah, thanks, Charlie, and it's nice to finally meet you face to face. I know a lot about your project. Thanks so much for allowing Commonwealth to come on board at such an early round. Thanks for buying into our vision with what we're trying to do by getting retail into these projects early access instead of buying in at much later rounds of DEXs and SEXs. We really appreciate that. Just one more question, before I move on to the other guys. How are you feeling about the market right now? There's obviously some really, really good projects out there that have been launching, and there's just not really too much retail interest right now. Do you feel like that's going to change, going into the summer, or do you feel like the market might have changed for good? How are you feeling about that?
So there's 4 categories. where I'm looking at. One category is we're looking at 4 categories at the same time. One category is the east side, of retail. There's quite a lot of interest from the Asian community on the retail side in terms of ordinals, runes, DeFi, deeping, all kinds of new primitive. We've been growing our community in the Asia side very effectively, and we have a lot of interest, demand from Korea, from Vietnam, and so on. The other side on this institution, we've been talking quite actively with Bitmain and Alpha, Meta Alpha, some of the public listed company in Hong Kong, in Singapore. The interest is there. They're kind of just learning and just catching up the game. Now this local pullback, right, local bear, is actually give them a bit more time to understand what's going on, who's doing what. I think they will gradually get ready, in Q4, in Q3 and Q4, for in terms of investment, in terms of liquid trading and so on. That's on the east side.
Just to interrupt you, a lot of people from the retail, friends and family are a bit confused from my side, because they're saying like Bitcoin's basically back at all-time highs. Why is everyone talking about this like mini bear that we've entered into? Obviously not really understanding, the altcoin market. Obviously the alts are taking quite a big smash.
Yep.
Do you think that Bitcoin is kind of trading up here and alts are trading down here purely because of that institutional money that's come into Bitcoin, or do you think there's another reason for that?
There's definitely the Bitcoin ETF is a very major factor. You see a lot of external non-Web3 money entering the space. A couple of billion of Bitcoin inflow, right, because of the ETF. We've been talking very closely to the Bitcoin ETF firms, including especially Franklin Templeton, who is our strategic leading investor on Series A. This is a new money entering the space, right? And I think this cycle compared to the 2021 cycle, the key difference is it's a spot trading purchase from institutional money. From there's a lot of family office, pension funds, endowment, the people who never interacted with any digital assets in the past. Now finally they have a vehicle to enter the space. These are the new money it will come from. But the retail hype, the retail FOMO, compared to 2021, I don't think that's there yet. It will happen. That's why we have the Bitcoin bull, not alts yet, right? The alts definitely still need playing the catch-up game. This year, Q3, Q4 probably will be the same. That we're gonna see the second wave of Bitcoin purchaser through the ETF. We get a lot of good signal from the ETF firms that they told us about that. From the Asia side, from the American side as well. From the retail, I think people are looking at all kinds of meme coin, all kinds of new primitive, right? Some of the low cap project and so on. Some of the ecosystem project in our Bitlayer ecosystem, they are very like that, like pretty interesting meme coin assets, even runes, fair launch kind of approach. Community like it. Although we're still trying to figure out their use cases for the long run, right? Because we don't want to support only the short term, short term like small cap project. We want to make sure they have use cases, for sustainable journey. But I think for retail, a lot of it still centered around meme coin for the low cap stuff. All the institutions entering the Bitcoin mainstream stuff. So that's kind of polarizing. The altcoin, the mainstream altcoin in between, I still kind of playing the catch up game in the next 2 quarters. We'll see the rally maybe next year. That's what I'm seeing in the market.
Yeah, Charlie, thanks so much for your opinion. We really appreciate the insight there. Cool. Let's move on to Bluwhale. I don't think your camera's on. Are you there, bud?
Yeah, sorry guys. I tried everything. For 10 minutes I tried to figure out how to make the virtual background work, and it's just not working for me. So I'm gonna keep the camera off to save you guys from looking at my bedroom.
Not a problem at all. Thanks so much for joining, and once again, thanks so much for giving Commonwealth access. We obviously go through quite a deep dive. There's quite a due diligence process that goes into any investment that any of our funds do make, and there's decisions that need to be made by a lot of people. So yeah, obviously you passed that test, and we really appreciate you buying into the vision of Commonwealth. Could you just tell the folk out there that are listening a little bit about the project and what you guys have been up to?
Sure. So Bluwhale is building the first user intelligence layer on top of blockchains. You guys can imagine us as a L3, L4 in the future, that not just aggregates data, but also understands and contextualizes data. so that the AI will then able to predict and memorize consumer behavior and future behavior of people in this space. We started this journey a long time ago when my co-founder and I, we've been working on like Web2 AI companies back in the days in 2011, 12, 13, and we were always focused on personalization. And the most fascinating thing was that personalization doesn't work for anybody in the Web2 space because only the Facebooks of the world have enough data and users. And so our assumption was like if people are going to be sitting on chain, then we should be able to build the same infrastructure we used to build for those big guys, but make it accessible to the 97% of the world. And that's what Bluwhale AI stands for.
Yeah, that's exciting stuff, man. Really, really looking forward to seeing this thing explode. And I think a lot of people are starting to talk about it. All of my my alpha groups are starting to talk about it, and the big whales are kind of asking how to get access. So yeah, really feel privileged for Commonwealth to have a early ticket into this one. And yeah, what are your views on the market? Are you kind of seeing the same kind of stuff that Charlie's seeing, or do you have a slightly different view about the macro situation at the moment?
I do have a slightly different view on the market. I think it's a good thing that the market is down. It gives us time to build. We are getting ready to launch the token. We're getting ready to launch different campaigns that will help us acquire more users and drive more engagement. To just give you guys some updates, since you guys invested, we just surpassed 800,000 users, unique verified users on our layer. Had grown from 300 enterprises to 3,000 enterprise accounts on our platform since January. And so growth has been incredible. People on the retail side, I always used to tell people like Bluwhale is a two-sided market, right? We have the consumers on one end, we have the enterprises on the other end, and we are the AI in between that matches them like Tinder and making sure that everybody understands each other. The consumers get the unique value proposition that they can monetize their digital profiles. The stuff that Facebook took away from them for years, but now they get financial liquidity through it. The enterprise get that they can understand their users better, get more insights, and build better products. And I think one of the things that helped us in the last quarter grow so aggressively is like building very, very strong and deep L1, L2 ecosystem collaborations, including, like Polygon, Sui, Near. We are now talking to Arbitrum and other guys. I think, like the way to really get into the space is help the L1s, help the apps that are building on top of it. That's our go-to market.
Yeah, for sure, man. Thanks for that insight. That's great. Yeah, looking forward to following all the developments. We're watching closely, and yeah, bring you onto some more spaces, closer to launch, and see what's going to happen there. Cool. Stefan from Nexis, are you there, bud?
Yay, how's it going?
Hey, Stefan. Yeah, obviously Metaverse invested in your project at a very early stage. Very impressed with what you guys are doing. Introduced the project to the Alpha Fund and the guys at Commonwealth. They all loved it. So yeah, maybe you can give the guys in the audience just a little bit of a background about what Nexis Labs is, and the development stages and where you guys are at the moment.
Yeah, sure thing. Also, thanks for having me on here. I appreciate it, and I look forward to a great future of working together. So yeah, my name's Stefan. I'm the founder of Nexis Network, Nexis Labs. We're primarily focused on building out the infrastructure for artificial intelligence and neural network systems that also kind of dive into like traditional markets, like Web2 markets, but also Web3. As we see a really big increase in the uptaking of AI and the progression of how it's being integrated into our daily lives, from directly integrated into our phones and computers. It's really invading a lot of our privacy. And we're facing this sort of dilemma in regards to finding a way to build a moat around our individual privacy and like safety and security to maintain like democratization as well as like our freedoms, but also leverage this technology as a tool, not a weapon, because AI is going to be very, very good. If it already is, but by 2027, they're predicting it'll be 1,000 times smarter than a human. And if you take a monkey and give it a human, ultimately the human ends up ruling the monkey. So if we do that with AI, it won't necessarily be that good of an outcome unless we control it. So the best way to kind of do this was through building out a blockchain ecosystem or infrastructure with an ecosystem on top of it, of course. But to build out a blockchain infrastructure that's able to sustain high transactions per second, maintain data utility while without sacrificing data privacy, which is what zero knowledge proofs really help do. On top of that, we want to integrate multiple compilers and virtual machines. So, like Nexis, we support SVM, so Solana applications, Ethereum applications, and we actually just recently finalized our development for ZK EVM integration, which is actually huge for us because it's about 3 months early, and we already have it live on DevNet tested. People are using it. And it actually enables us to scale up to, theoretically, by the way, not actually yet, we haven't fully tested it, but 5 million transactions per second, which is by far the fastest, most scalable blockchain that we would see on the market today. On top of that, being the most versatile. And we're really pushing for this omni-chain support to make it a very developer-friendly environment. But why does this all matter? And it matters because at the end of the day, we really need to build the infrastructure around the way that projects can leverage their data, as well as building these AI systems on top of it without having to really impact the users at the end of the day. Because if not, it's just going to be quite bad, right? And there's a big dilemma in regards to projects today that you guys probably see for liquidity reasons. So right now, in regards to like the crypto market, we see that projects aren't really performing as well when they're launching like altcoins and everything, because a lot of the liquidity went to the Solana network, and most of the projects actually launch on Ethereum. So we have a fragmented ecosystem of liquidity upon these two different chains, and most likely people aren't going to go back and forth and dive into projects really fast as they see them launching, like they traditionally would on Ethereum. So we have to account for that for like altcoins launching and everything. But overall, yeah, we've really been focusing on building up the whole infrastructure. We've brought in a lot of projects, so about 30 plus projects already. We expanded our team, so we brought in a head of marketing and head of BD. We've rolled out the ZK EVM integration. We actually built out a really cool Chrome extension too, wallet, so it supports everything. I can actually show you guys this. Let me see. Share this here. Are you guys able to see this?
Yeah, we can see it now.
Perfect. Yeah, so we built this out. So it's pretty neat. It makes using our network really easy, simplified, and it's pretty much for our DevNet and testnet right now. But also it's multi-chain, right? And it helps like the faucet, helps people delegate to nodes here, and yeah, all that kind of stuff to make kind of integrating into Web3 seamless in a sense, compared to traditional ways. Because one major issue that we found, and this is actually kind of needed overall, is that we need to scale more Web2 users into Web3. But the way to do that is you have to make Web3 backend, like the backend of Web3 and blockchain, much more complex, kind of like a computer. The more complex the computer gets, the easier the front-end user interface for people to use becomes. So we kind of took a step back and started building it out from that end, because now it's a big issue because we have a lot of like hedge funds and ETFs money coming in, which is good money because it's not scared money. So we call it retail scared money because they'll sell and like they do most of the volume day to day. And then hedge funds and ETFs, they'll buy and just hold for the long term, or however their strategy is. Typically, it's pretty solid for a bit, which makes the market much more stable. So we'll see much higher lows compared to traditionally in the previous years of Bitcoin, and hopefully higher highs as we start bringing on more retail. But I see there's been a big problem with actually adopting more retail, and I don't think it's really due to people just being scared and not understanding the tech, but more so being able to use the tech efficiently and applying that security dynamic to it to move large amounts of funds. So we're really taking an approach to bring this on into the market, create a really developer-friendly ecosystem for any project to kind of pretty much integrate. So if you're on Solana, if you're on Ethereum, You can integrate with ease within a few like changes of a RPC URL and like redeploying smart contracts, which is like super simple for most developers. On top of that, being scalable enough for the actual future, because we may not see it much needed today, but in tomorrow, which could be a year, 2, 3 years, we're going to see a huge increase in the advancements and rollouts of robots, artificial intelligence agents. So like pretty much like all these different agents specialize in different tasks for AI, as well as swarm intelligence. So it's kind of like what I just said, but all these different agents communicating and transferring data and utilizing data, and then also personalized medicine, which we can see a lot of today actually. So the only real solution for that is blockchain, right? Because it's the only decentralized distributed ledger that can secure data, verify it, and make sure that the people are protected from being manipulated or having that data modified or hacked or stolen from malicious actors.
And just just kind of to interrupt you there, like everything you're saying is great, and I understand it, but I would say there's quite a few people in the audience that don't really understand it. You're quite technical, which is great, and it's fantastic. But going back to your topic about how do we bring people on from Web 2, where they don't really understand what's happening with Web 3, but they want to invest into blockchain. They want to invest into tokens. They want to invest into good protocols. Like, what is the purpose of your token? So I understand exactly what the purpose is of what you guys are building, but why would someone out there, besides speculation, why would someone out there want to go buy the Nexis Labs token, and what can they do with it? Is it purely speculation? Is it kind of just holding and hoping that over 3-4 years it's going to go up in price, or is there some kind of utility where you can go and do something with the token? I'm just interested, and I want to start asking more and more founders that, and also educating our audience and our community about what the purpose of these tokens are, because there's so many tokens out there at the moment. I'm involved in loads of them myself, where I've kind of got my partners saying to me, so like what must we do with that? I don't want to mention any names because I don't want to badmouth anyone, but it's kind of like, okay, besides speculation, what is the actual use case of the token? Why would I want to hold it? So could you maybe just tell the audience out there what the use case of the Nexis token is?
Yeah, so Nexis, we're actually a layer 1 infrastructure. So instead of relying on any other project or fundamental layer like Ethereum or Solana as a layer 2, we are the layer 1. The reason why that's really important, number one, is because layer 1 or layer 2s typically have more security risks. They're also reliant upon the layer 1, and they don't really add much value right now. They're majorly just looked at as band-aids. For us, it's like we're a layer 1, we support zero knowledge proofs. We support Solana applications like Rust-based. We support EVM, or the fastest EVM and ZK EVM chain in the marketplace and with the lowest fees. So the way that works is that we leverage delegated proof of stake. So it keeps the whole network decentralized. Users can delegate their tokens to nodes, or they can run nodes and earn rewards for securing the network and democratizing the network. But that's not the only thing either. We actually also are deploying our own data marketplace, because to support the overall growth of the network and to actually being used for AI, you have to have ways that people can lend data, like lease data, sell data, buy data, and store data, and has to be on chain, so that should be utilized. So our tokens utilized for that is utilized for all the gas fees on the network, deploying any smart contracts, setting any transactions, as the base liquidity pair for any tokens really deployed on our network, and also is leveraged in regards to earning more rewards for kind of going into like the ZK side of the chain, because it does have separate nodes for this. So to earn those ZK and NZT tokens with the stake NZT, and that's going to be kind of pivotal of securing that side of the network as well. And that's kind of what the fundamental of it is. So it really helps keep the whole overall ecosystem running. It's the native gas token for our chain. On top of that, holders obviously will have other kinds of rewards from earning fees. So one major thing that we realized for layer 1s is that they don't make money. And this can be a problem easily solved. Like, for instance, we saw one other project, I'm not going to give any names either for it, but one of their team members wrote a big paper about how layer ones don't make money and how they were struggling, and then some of the solutions they came or utilized to overcome it. And for us, I was like, that was really insightful because you don't really think about it like that when you're just kind of starting off, right? And how kind of like if you're as a layer one, if you're selling underlying token later on, it kind of leads into a death spiral if the market's already in the bear market, because then the assets on your chain also decrease in value. And a layer one success is based off of the total value locked on chain. So you want to avoid that at all costs. And the way we could do that is by actually charging fees on wrap tokens on other native chains in those native currencies. And then we can utilize those fees to then kind of feed the market and the growth of the ecosystem, which is, I believe, pretty different in comparison to any other layer one. But I believe it's a really smart turn, because now we don't have to rely on any of our tokens being sold at all, even as our treasury, which will provide us enough time and funding to actually grow into a strong competitor in the top 10. On top of that, the performance and the network overall, just if you've seen the stats, it just really blows out the other competitors. And a kind of a statement of this is that our testnet had 18 million total transactions, 12 million wallets created, and 5,500 smart contracts deployed. Our community portal has 130,000 users already. And then on our DevNet, we have over 100,000 transactions within the past few days just of deploying it. So the adoption's there so far, and we see that, and we see developers actually wanting to utilize it, which is one of our really important aspects, because you can't have an ecosystem without developers or users. So we have to bring them on kind of at the same time, which is a challenge, but it seems like we're doing it quite successfully so far.
Yeah, man. As always, thanks so much for the insight. You know, you don't have to give anyone the insight that you're giving to us. We really, really appreciate it. I'm sure the community and the guys that are invested in the Alpha Fund are really, appreciating this insight depth as to what's happening behind the scenes at these projects. So that's great. It looks like Josh had to hop off. I wanted to ask him a couple of questions about what he thought about the current state of the market, but if he's gone, he's gone. Just a question for both of you. Do you guys have TGE dates in mind? Are you kind of waiting for market conditions to get a little bit better? Are you watching what, competitive projects or projects similar to what you guys are doing, how they're performing, or what stance are you guys kind of taking at the moment?
Yeah, that's actually a really good question. I hear it all the time recently, actually. And yeah, so the way we're kind of looking at it is that as a layer one, we actually have the most action potential. Layer ones are the best performing at any kind of project category, which is great for us. Market conditions right now obviously aren't the best, but we actually just got into a partnership with Trireme Trading. So they're a market maker, a really good leading market maker, originally from Downmaker, I believe. And they're incubating us, as well as Transcend Labs. So we're working with them to strategically plan our launch in regards to finding a good market opportunity. So if the market doesn't fully recover into a full or bull market soon, what we can do is actually find pockets of increased liquidity. Like today, for instance, will be one. You see the market pumping. We can leverage that as for a launch opportunity, and then really scale it from there, because layer ones are much easier to market make and create stability, because we don't rely on other native chains currencies, because we are the native chain's currency. So it's more so about how much stable coins value we can bring on, which, since most people will be in stable coins in a bear market, we could provide a lot of incentives for that to actually drive that to our chain. So we could leverage it actually into a beneficial impact for our overall ecosystem to drive growth. So there's a lot of different ways that we can leverage either a bull or bear market, which is quite nice, I think. So it's not so like fully reliant on the market as a lot of projects would be. The only difficulty is raising capital, because we do have a node cell we're just about to launch. And the reason why actually is that we have to decentralize the whole network. And on top of that, we have to have all the nodes pretty much running initially, the Genesis nodes, and then also show mainnet activity. So a lot of the top tier centralized exchanges like OKX, Binance, and all of them, they want to see mainnet adoption, but you can't show that pre-TGE unless you're giving out tokens, and that could actually provide security issues. if not done correctly. So the only way to do it is through having nodes, set up nodes prior. So you can say, hey, we have these many nodes set up. And then also,
it's actually just interrupting you. It's quite an interesting discussion because at Metaverse we invested into 80 seed round projects, and we do quite a lot of advisory about how to go to market. And 3, 4, 5 months ago, we were kind of adamant about our projects getting onto these big tier one exchanges, and if they can't get onto the likes of Binance, which is very unlikely for a project first listing, but I'm talking about more like KuCoin and OKX and those guys who are obviously just under Binance. I was saying that it's essential that these guys launch there, and it's very, very expensive. To list your project there is in the region of around $1 million once you're done with giving them tokens and liquidity, and the risk of these exchanges dumping the tokens. I was saying, guys, it's essential. You've got to get the volume up. But what I've seen with Commonwealth is, and I was the one from our side really, really pushing that we have to be on KuCoin, because if you're not on a tier one early days, it's very hard to get on there at a later stage. But what I've actually found now, the way the market is it might actually be better just to quietly launch. If you really want to do TGE and get your token out there in this market, it might actually be better just to launch on a DEX and to get very low volume coming in, just to keep your community happy and to show them TGEs happened. And then when the market gets better and you can start seeing, real volume. I'm not talking about market makers, putting in fake volume. 95% is all just fake wash trading. I'm not talking about that. I'm talking about real volume that comes from retail investors that these so-called tier one exchanges are supposed to provide. This is what I'm saying. I'm saying it before. I was like, you have to go onto these tier ones because otherwise the project's going to be screwed. But I'm starting to turn a little bit of a corner, and I'm interested to hear what you guys think of that, about just quietly launching onto a DEX and then building up to something bigger when the market, takes off. What is your take on that?
Yeah, so that's actually I think a much better outlook in comparison to the current market standards anyway. I think it depends who you're asking for this question, right? So if you're asking like an investor, they're going to say we want the big launch because they want to see that 10, 20, 30, 100x initially, which I don't think that's even the best outlook even for investors, because if you look at it, those people are typically vested for longer periods of time, and you want to see a potential, like a longer growth and steady growth, right? So you actually have all that liquidity backing you, and it's price stability. So it's not just a hype launch and then dip, and then now you're just sitting there trying to figure out how to kind of get that back, which you never really can. The projects that can obviously are the ones that are at the top, but they had true innovation behind them, and then the other ones are just sitting there. People are just waiting for something else to launch. So I think it's actually strategic to do it that route, because then it provides a lot of incentive for people to look forward to, because you don't want to get all of the hype just drawn out into one big push. Instead, you can launch and slowly, it doesn't have to be even super slow. You can do it quite quickly too, leveraging other outputs like CoinMarketCap, CoinGecko, AvaDex, and all of them to get the volume and eyes. And typically, if you look at the market, DEX users actually utilize and leverage Web3. Centralized exchange users are typically just trading. So they'll give you the volume, but they won't give you the actual utility that you want to maintain holders and create that community-driven value for the product you're building. Because at the end of the day, we're building a product and a service and the infrastructure, not just a token. Because if that was the case, then what's the point, right? So depending on the project, I think you could leverage this to a very strategic and successful launch. Not to say like even launching on lower tier exchanges and then gradually working your way into those bigger ones. And when you do so, it has to be very, very precise though. You can't be sloppy, and it has to work out the right way. And you have to have it kind of set up in tiers. And I think taking that approach can actually lead to a really great success. And it sounds kind of stupid, but you look at SafeMoon, right? They built a lot of hype just launching about the idea of launching on like a Whitebit and Bitmart. Like nowadays we look at those and we're like, those aren't tier one exchanges, but look how big they got just off of the idea of them listing on those, right? So it's really about how how you kind of leverage the market, build the community, build the utility, and then push that with more advancements for the project.
Sure. Hanjin, what do you think about that take about launching on a DEX first and then moving up to the kind of tier 2 and tier 1 exchanges?
I do like the idea. I'm one of those guys that like to de-risk by doing both. So I'm telling my team to execute on the, like on the conversation with the CEXs. We have about 80% of them secured, a negotiated pricing, a negotiated, like different contracts already. And then at the same time, we are exploring and growing more and more through Dexis, the community. I think everything before TG is all about building the community. That's all, my honest opinion, right? Like everything you do is just can you build more community, and that's why we came to Commonwealth, right? Like you're raising from the community because you have people behind it. We raised from multiple different really strong communities out there, including like like Citizen Capital, Neo Tokyo. All of those guys are incredible supporters, right? Because you have more people holding your token, more people cheering you on, and more people supporting your ecosystem. Another approach that we are going, which is very common now, because the guys at Nexus are doing it too. It's a node sale, but our approach is a little bit different. I feel like we wanted to put a twist on node sales because most of them are very technical. Running nodes for retail is almost impossible. Most of those node sales are 80% filled up by institutions and then 20% just FOMOed in. And so what we did is we transformed like Bluwhale's application desktop into a mobile application. Uh, now more than I would say like 60% of our users are on mobile. And then we are doing a node sale where people can operate the nodes and get them started, activate them through the kind of like mobile device that they have already running. So it's a very consumer friendly.
Will that node sale be available to the public?
Yep, it will be available to the public. So we are skipping IDO. We are going to the node sale, trying to attract as much. I see it much more less of a fundraising exercise, but much more as a user acquisition exercise, where we want to not just grow the mobile community that has downloaded our mobile app, but also like give them things to do that allows them to generate passive income long term with their profiles. And then of course, by aggregating the nodes, they can become their own community leaders. They can become their own like kind of like aggregators. They can buy multiple nodes in order to kind of like operate and mine more tokens along the way. And then we also bring in a interesting virality twist to it, where it becomes a multiplayer game. That means one individual mining or operating the node can operate with 10 people as a team, and you will get a boost in token emission. So I think those kind of approaches that we have built into our product-led growth into the product will hopefully allow us to grow even more aggressively our community, surpass 1 million users, and then slowly move towards the listing side of things.
Incredible. Yeah, I'm excited to have a look into those nodes, and I'm sure guys listening will take a look as well. Just onto a different topic, what do you guys think about investing into this current market? So, we've obviously got this alpha fund, and we're very, very selective about what we go into. It's a very small fund. Tony, correct me if I'm wrong, but I'm pretty sure it's $1 million fund. And the ticket sizes are obviously quite small. I think they vary between like $50,000 and $100,000. In most cases, we've obviously been very selective and only been into 3 up until this point. Would you guys kind of advise from your side to carry on investing? And, even though the market isn't really playing out as like everyone kind of expected it to at this point in the cycle, with launches kind of happening and, they're doing like 2 or 3 or 4x and then kind of dribbling back down to those private and seed round prices. So would you hold off from investing right now, or would you be looking to invest into things that are launching in a couple of months' time or maybe 6 months down the line? What kind of approach would you take, Han, if someone asked your opinion? I'm not saying you're 100% going to be correct, but it's nice to kind of get people's insight into the way that they're seeing the market.
So I think like it's a great opportunity. I was investing a lot just in the last couple of weeks when the market was down. I think it's a great opportunity to build yourself a position. especially with like projects that are out there, very smart in liquidity management. I think like there are a lot of projects right now that understand how to manage cash flow, especially in positions when the market is down. Those kind of projects will sustain their value even through those rough times, and then they will come out even more, even stronger, right? Because I think like the folks that understand when to spend, or kind of when to sprint, when to slow down, when to like double down, is those are the best guys. And I think you will find them during a market downturn versus like a market upturn. Because in a market upturn, like it's just too much noise. Everybody's doing well. Everybody's like super overhyped. Like valuations are going over the roof. It just makes no sense. Like so that's why like my idea is like now is the time to invest, and then when the market goes up and everybody starts going into the bull run, slow down. Because I feel like a lot of the guys from last bull run, they FOMOed into a lot of projects at the peak, and then you know what happened afterwards.
Yeah, it's interesting you talk about managing your cash flow because, obviously a lot of projects are in a situation at the moment where they went out and raised $2, $3, $4 million. They obviously spent, between $500 and $1 million on listing on an exchange. And then you're kind of in a situation where you've got your market maker kind of messaging you going, hey, like, do you want to put in more money into supporting the price? And I really don't know what the correct answer is, but I've been on a couple of spaces and been having this debate with a few founders, and I still don't know what the correct answer is. Do you kind of burn and eat into your cash flow by buying your own token up and supporting the price to make it look good in case tomorrow the market is going to be good and then it's going to bounce off a much better level? Or do you kind of say, let all the jeeters just go sell their tokens, and then it's going to give an opportunity for people to buy up from a much lower sort of base? The issue that I have with that is, I do feel sorry because I'm an investor myself. So if I invest in a project, let's call it 18 months ago, I help the project build, and I'm in from, let's call it a 20 million valuation. It launches and goes up to 100 million. And then the project kind of just lets it come back down to, any price, and it goes down to a 10 million valuation. And I'm kind of sitting there going, hold on a second, I'm locked into this project for 3 years. I've been helping these guys for the last, kind of 2 years to build the project and give them strategic advice. And now the project's, gone for the approach of, well, we don't want to burn into our cash flow. We're just going to let the price go into its own price discovery and do whatever it wants. So I'm trying to work out, which one is the correct approach. And I'm also quite interested to hear what you guys think of that as well, because you guys are going to be launching soon and probably be in a similar boat. Do you just let the price trickle down? You've got a good product and, eventually you will go back up? Or do you go, okay, let's keep putting money in to support those prices, at least to like a private round kind of price?
Yeah, if you want, I can actually speak on this. So I think it's really important to maintain good cash flow, as having cash flow is what will help out the project to actually operate, and also having the ability to actually generate revenue, whether it's a bull or bear market. And that's what will kind of be the selector for projects that are able to thrive and not just focus on just only like the raise capital. And then also building out the community and having a strong community to back you during these hard times is also really good, because those people will hold that actually believe in the project. But you don't want to burn too much cash with stabilizing the price, but it's actually kind of better to find strategic points to acquire more tokens at like I guess lower price levels. So I guess essentially that does support the price, but you want to kind of dollar cost average, especially as the project, because the more tokens that are in the project's kind of like treasury enable price stability later on as well, when that bull market does come back, so people aren't just selling off, because that's I think people kind of overlook that as people that buy in really low are kind of like the people you have to look out for later when you are doing good. They're the ones that are selling, preventing further success. So depending on the amount of cash flow you have, you can leverage these kind of tactics to pick up more tokens at the lower cut price, and then that'll help stabilize it, and then maintain those tokens and reserves to then support the price better later when you're doing really good, right? Now, like you mentioned, if like, let's say you launch at 20 million, you go up to 100 million, then drop down to 10, you don't want that to happen because then people will be in fear. But if your project actually has true utility, that shouldn't be really the case, because you want people to actually be utilizing the product, or I guess like the token for like the services or products you provide. So I think, and I guess if you're investing in stuff, investing in projects that have that service level kind of use case will be a big driving factor for growth and price stability in the future. Because speculation is good to have because it could end up good sometimes, but theoretically, um, it's not always a sure bet in regards to stability. So it's all about kind of, I guess, risk management at that point. But yeah, I think reserving cash, but doing a good in between is, I guess, the most efficient way, because you don't want to, like, a good chart's the best thing for marketing, pretty much. So
Yeah, the big problem with a lot of investors at the moment is they're not seeing the kind. I'm talking about early stage investors like VCs. They're not seeing the kind of returns that they were getting in like 2021 in these early stage projects. So a project launches, they invested at 20 million, it launches at maybe 30 or 40 or 50, and then they get 10% of their tokens maybe a few weeks later, depending on what the vesting terms are, and then they're kind of sitting there going, shit, like, I wouldn't mind, putting this capital to use somewhere else. So they go sell their 10%. They go sell their 10% because they've still got 90% invested in the project. And then, I'm not saying everyone, but a lot of these VCs get into this mindset where they're going, well, if all shit hits the fan, at least we took something out of the project. But that kind of causes a bit of a snowball effect. And then the community starts asking questions like, is this a rug? Why is the price going down every day? Why is no one supporting the price? And, where are the market makers and blah, blah, blah. So it's quite tricky, no matter how good your product is, and no matter how much, community building you do and how much you speak to your community and how transparent you are, it's still very, very tricky because, and then you're also getting, pressure from the centralized exchanges. You've got to, have a certain amount of volume every single day. Otherwise, they're going to start fining you, and it's kind of like, unless you want to be shady and start wash trading, then just to do things naturally is quite tricky in this market because there generally isn't really much retail buying going on. Han, what's your thoughts on this?
No, I completely agree with you, and that's why like we have been delaying our TGE for a little bit because we wanted to feel more confident about a straight path to monetization. We wanted to make sure that both ends on the Bluwhale platform we have ways of like people spending and earning capital. On the enterprise side, we have successfully achieved that, right? Which we call product market fit, where the enterprises are now spending on a monthly basis, like for the services that we're providing, and then we can use that revenue to then deploy back into the token and then buy back some of the tokens at a much lower price. But I would say I would answer the question with like three approaches that we are doing. One is like figuring out your product market fit, get a very early indication of like good strong monetization strategies, have a clear path beyond your TGE for getting to revenue, right? That's the first thing that we did a lot studying on. The second thing is about your tokenomics, right? Like designing a good tokenomics. I've seen too many companies that are offering you tokenomics design, and then they come in and then they slap like a template on it, and they, like, where did you get this from? Yeah, I got it from another company that just went live, right? So stuff like this is very painful and harmful to the company itself. If you have really good tokenomics that is tightly bond with the product itself, it actually drives a lot of liquidity that will be tied into your project itself. You have a lot of TVL, you have a lot of users that are holding, and that will ultimately keep your price stability much at a much better point. And then the third part, which we are doing, is like what we have studied over the last couple of months, is like looking at every single token that launched and then analyzing like, hey, what's different about them. One of the best case studies, like Aether, right? Like Aether did a really great node sale, right? Raised way too much. The community is not too happy. However, because they have so many node holders, they were able to stabilize the price to a certain degree. They have certain delaying options where you cannot pull the token right away, and so different dynamics in the way they design the products and the way they design like the system and the network help them stabilize through like a market crash in the last couple of months and just stand out ultimately. Their token did so much better even though like from an adoption perspective, I don't know like how many people use Ether like as a compute supplier, but from a tokenomics perspective, a great play to go to market.
Yeah, it's interesting you spoke about Aethia nodes. I had a long chat with Josh about them a couple of hours ago. And yeah, we also just were saying they just sold way too much. It's a great product, but just sold way too much into the market. Guys, I think we've run out of time. I'm sure you guys have very busy days. For everyone in the audience listening, this is what we're trying to create at Commonwealth. We're letting you guys into the founders' minds. These are the kind of calls that VCs have with founders on a daily basis. So it's really cool that these guys have come on and they've shared their knowledge with the whole community. Yeah, thanks so much for taking time out of your day to come share stuff with our community. Tony, thank you for all your knowledge on Commonwealth and being here. I know you're very busy at the moment. And everyone that tuned in today, we really appreciate it. And please do join our next one and all the future spaces that we have lined up. We will put on our socials. Guys, have a great day. It's been great chatting with all of you. Thank you.
Bye-bye.
Thank you as well. Take care, guys.
Thanks, everyone.
Commonwealth will literally be the largest fund on the planet that's owned by the people.